Welcome back to another exciting trip around the crypto canaverse. In this episode, we will delve into the insights of Mitch Petraka, an M&A advisor who shares how he leverages technology for negotiation success. Additionally, we will learn from Matt Layson how his crypto hedge fund Globe3 Capital enables investors to diversify across the blockchain, cryptocurrency, and digital asset space. Before introducing our featured company and guest speaker, our spiritual host, Alan Lau, will present our Bible verse for today. Welcome, Alan.
Thank you, Crystal. It's Good Friday today. So just first, actually, Crystal and I was meditating and praying about this verse. It's good and it's great. And it comes from 1 Thessalonians 4:14. For we believe that Jesus died and rose again. And so we believe that God will bring with Jesus those who have fallen asleep in him. So as we observe Good Friday, I don't know what everyone's doing for Good Friday. I'm attending Bayside Church in Granite Bay. It starts at 6:30, and we're observing the crucifixion of Jesus Christ that died on the cross and rose again on the third day. So there's going to be a lot of people, and I'm excited. I'm the one going to be helping with all the leaders in our middle school. And I hope that, whether you believe or not believe, take this opportunity to learn and get to know about Jesus Christ, because he is always there for us. He will never forsake us. He's always been there as long as we continue to believe and pray. Today is the day of crucifixion. So let's take today to observe him dying on the cross for us to give us eternal life. So, Crystal, I love this verse. 1 Thessalonians 4:14.
Thank you, Alan. Thank you for sharing that. We'd like to welcome our featured company, Matt Layson, co-founder and chief investment officer of Globe3 Capital, the digital asset hedge fund for the future of Web3. Welcome, Matt.
Thank you, Crystal. Nice to be here.
How are you? Nice to have you. How are you doing today?
I'm doing great. Yeah, Good Friday. Couldn't be better.
Good. Where are you calling from?
San Diego. Yeah, Encinitas, California, actually. So North County, San Diego.
Nice, nice. Is it sunny there?
Yeah, unfortunately, it's about 65 and sunny, but it is going to rain this weekend, which makes me very sad. I do appreciate the rain, but it's been raining quite a bit down here this last winter. So,
Oh, that sounds wonderful. Not the raining part, but the sunny part. So
normally
welcome,
it's
Matt.
fantastic. It's as good as, you would expect. Yes, no complaints.
Yeah. Yeah. Matt, can you elaborate a little bit on Globe3 Capital, how Globe3 Capital empowers investors to diversify across the blockchain, cryptocurrency, digital asset space?
No, sure. That's a great question. When we started Globe3 Capital in July of 2022, so we're coming up on about 2 years. And my partner Jeff and I, we believe there's two things you need to do to be successful. You need to be different and you need to be right. And so when we were creating this hedge fund, in order to be different, luckily my expertise is going after and researching protocols that are small to micro market cap tokens that are harder to find. The stuff that you don't find on Coinbase, Kraken, and we believe it creates kind of an exponential opportunity to get to these projects at an early stage before the later stages. So a lot of times, by the time something's on Coinbase, it's already done a 4 or 5x or more. So we created Globe3 Capital in mind for our LPs. And what did we want to do? We're a liquid token only. And so what that means is we don't do seed or pre-seed. It's a kind of a very basic fund, and we hold anywhere between 8 to 20 tokens at a time. And also during that, with the 8 to 20 tokens, one of the main diversification factors that we use is within the sectors. So that's how we diversify. We understand we're in a very kind of risky space when you're dealing with these smaller and micro caps. So a lot of research needs to go into this, but like we said, we try to spread out in sectors. So whether it's deep in real world assets, AI, gaming and metaverse, we try to spread the tokens out in different sectors to give different exposure. And one of the benefits with Globe3 Capital, we believe, is a lot of our competition, they'll invest in Bitcoin and Ethereum. Now, we really like Bitcoin and Ethereum. There's no knock on that, but we don't believe you should be paying hedge fund fees for something that you could now go buy at Fidelity, BlackRock, there's 11 different ETFs out there. You can buy Ethereum on any centralized exchange, Coinbase. We wanted to give our LPs access to the tokens that are harder to find, where you have to go in deep and use, DEXs, Uniswap, SushiSwap, things like that. And it's not that our investors can't do this, but they don't have the time or the 1,000 of hours to spend to go and do that type of research. And that's what we provide. We have a lot of successful LPs that work 80 hours a week, and they really want that exposure. They already own Bitcoin and Ethereum. So it's our fund that they invest in to kind of be able to spread that out. And our fund itself, we've also structured it to make it a little bit more user-friendly than most funds. That would mean $100,000 minimum, no lockups, which is a big deal. A lot of times you could have lockups for years or multi-years. And one of the big boons lately for our fund has been being able to partner with a self-directed IRA company. So now we're able to take IRA money and 401k money, and that's been fantastic because for our LPs that have done that, that's been able to supercharge their retirement accounts. And a lot of them need that, all of us here included. So yeah, that's been great for us. And so that's a lot of ways that we try to differentiate and give our LPs exposure to something that they normally wouldn't have access to.
That's wonderful. I love the take on the RIAs. That's brilliant. Can you tell us, how do you go about choosing funds or choosing projects?
Yeah, it's funny. That's a great question. I wish there was one website that you can go to, or if I had a crypto Bloomberg terminal or something like that we can all access. I've spent many years, and really it's just been a passion. I mean, I got introduced into Bitcoin in 2014, been following ever since. And really it was DeFi summer that I just got fascinated with going into Ethereum, downloading a MetaMask wallet, using different decentralized exchanges. I was one of the original Uniswap airdrop recipients, and that was pretty exciting. But for me, it just became a passion. So I spent countless hours doing this because I really enjoyed it. During these last 3-4 years in doing that, we have dozens of websites I've compiled. I could say I'm deep into crypto Twitter. There's even YouTube accounts that provide value. It's using all different types of mediums, and we've kind of put together all that as far as our research goes. And we've developed what I like to call our token evaluation standards. So, we'll rank different protocols based on really an overall ranking, and that includes the team, how strong are the developers, what's their roadmap look like, what are they trying to accomplish? That's a big deal too. I mean, a lot of times if we don't believe that there's a proper vision or what they're trying to accomplish doesn't make sense, then that's not really something we're interested in. And then we just, tokenomics is huge, token utility. I mean, obviously that's very important. You have to have demand for the token. A lot of projects have tokens when one's not needed, and it's important to ferret those out. So it's a combination of those and the standards that we'll create that we kind of give each project a rating, and thus, put it into our top 8, 10, or 12. And as money comes in and we allocate it, we just pick the projects that we think have the greatest upside and obviously the lowest downside. And that's really how we evaluate it. It's a little more convoluted than just say, hey, we go here, here, and here. But that's where it's been great to be able to been researching the last few years to kind of, compile a lot of the data points that we use.
Yeah, the fact that you have so much passion is what I love, and having your finger in the pulse. And what we were learning from Russ about being a community manager a little bit earlier before we opened up this call, is that you're in all of these Twitter groups. I'm sure you're in Telegram groups as well. You're talking to founders and other people that are passionate and deep into crypto, and you get to hear about things that most people do not hear about.
And that's exactly right. It's a good point. We've been on multiple calls with founders of projects. That's been great. We're looking to get on boards of advisors of different projects. And yeah, it's really, we're very active on LinkedIn. That's another area too. But just being in the space and really going deep, we've really met a ton of people, and it's really surprising the amount of contacts we've been able to develop. And yeah, you never know where the next idea could come from. You could, whether it's Twitter, like I said, or on a website or from someone that you trust, that's just maybe the name of the project, and then you decide to dive deep. But our network is immense, even in the last couple years, and so that's where it's been really great to be able to dive into these projects, but also really get any ideas from all over the place. And but our network is really a big benefit to our LPs and our ability to kind of pick the best projects, in our opinion.
Yeah, they say your network is your net worth. It's relationships over the transaction. So I love that you're out there building, relationships and a network that's super important. You mentioned you're looking to get on some advisories, or can you elaborate on that?
Not too much yet, but once again, it's really just kind of partnering with different projects and offering your expertise and seeing, it's about everyone about helping each other. And so in a lot of ways, there's a lot of projects that are looking for funding. And even though we might not be seed or pre-seed, we're liquid token only. We've met with a lot of different VCs and funds that might do that. And so we're putting people together, and that's been really great and really kind of helping the space in general. Whether we benefit or not, that's not as important to us when it comes to that. I do believe in karma. So putting people together, helping people in the space succeed, it will all come around. And so that's what we try to do. And if a position working closer on an advisory board with a project opens up, then sure, we'll jump at it, jump if it's the right opportunity. But we love putting people together, and if our network can do that, then that's great. It's great to help the space.
Yeah, that's one of the reasons why I love both you and your partner, Jeff, is that you guys believe in doing unto others as you would have them do unto yourself. Or I think I just switched that, but what goes around does come around for sure. We have a question over with Russ. Russ, go ahead.
Yeah, I wasn't sure if we were into question time yet, so I apologize if I jumped ahead. I
Perfect.
was
Perfect.
curious, and it was just when you mentioned digging into tokenomics and that being a huge thing that you evaluate before jumping in. Do they always have to have a token? I guess is my question, and yeah, so I'll just leave that out there.
No, that's a good question. For our fund, yes, they do. And so that's how we've structured our fund, being just a straight liquid token. There are projects that obviously require seed capital. That's not what our Infinity Fund does. Now we're going to start a second fund, hopefully sometime next year, and that'll probably include kind of seed and pre-seed. But at this point, we've kind of structured it to where it's liquid token only, and so that's really our main focus at the time.
Got it. Okay, cool. I mean, where my project is, we're actually going to be our own stable token, and
Okay.
we sort of went around the whole idea of doing an IDO, ICO, because we're mainly a marketplace. So we wanted to keep the focus on the NFTs and the value there. Because if you have a token and then you have NFTs, there's a disjoining effect with the value of this and that. If this token price goes up and the value of that goes down, you never actually know if you're getting a good deal in that. And so we had to go that route. So we had built out a huge tokenomics light paper, and it was fantastic, and then just had to kind of do away with it. So anyway, that was just where my curiosity came from, but really
And
cool.
and I'd love to hear more about your project anytime. So whether it would be a direct investment from us or anybody that we know, any way that we can help, I'd love to hear more about that. And as far as NFTs, we kind of mentioned, I know what I don't know, and for our fund is to kind of take risk away from our very aggressive risk space. We don't trade on margin or use any leverage. We don't go out and buy NFTs, and that's a great opportunity for some, but that's not my expertise. That sounds more like your expertise. And so I try to stick in my lane and what I know. And so we really try to limit the risk in our space by I used to be a derivatives trader on the Pacific Stock Exchange back in the day, but we're not doing that with this fund. We don't think adding option trading on top of buying lower market cap tokens is appropriate risk. We just think it's too much, being that we're already in this space already. But
How important is decentralization to your fund?
that's a very good question. Decentralization is very important to me personally. We believe, I've always said you're in this space for the revolution of the money, and we are in it for both, to be brutally honest. I don't really, anyone says they're not in it for the money. I'm not so sure that's 100% true,
It's
but
true.
decentralization, I'm very passionate about. That's what, when I first found Bitcoin, this in our society today, as government and corporations, every single day, everything gets more and more centralized. And so that's why I'm so passionate believer in crypto. Now, when it comes to investments, it is important, but you could break down almost any protocol and say they're not sufficiently decentralized. Even whether it's, you can talk about admin keys owned by layer twos, you can talk about all this different stuff, but in theory, I want to make the best possible decisions for our LPs and what I feel that are going to have the best returns. It probably won't hinge on decentralization itself, but I'd like to think that it is very important. So I wanted to just kind of give you an honest answer. It's very
Yeah.
important, but in regards to investments,
What about
it factors in a little bit. Yes.
what about people who put money in with you? Is that like what's the resounding or what is the common theme with people who put their money with you? This is not in my realm of expertise, by the way, if you can't tell that I don't know the lingo. But is it important to them per se? Like, because I know when you're digging into tokenomics and then there's automation, and so like you're going to get X amount because the smart contract says this. So are they like, is that a criteria for them? They're like, okay, I want to put my money in here because I know that you do X, Y, Z. Does that make sense at all?
No, I understand what you're saying. I would
Mhm.
say our LPs, it's not important to them per se,
Mm,
right? I think they're just looking for some crypto exposure outside of
mm.
Ethereum.
Okay.
Doing it
So they're
from
more
everywhere.
traditional.
Yeah, they're more traditional. I mean, our fund started with friends and family, and now
Got
we're
it.
moving it outside of that. It's getting bigger as and now we're friends of friends and business partners and things like that. So initially, it's just, hey, they want exposure to the space, and that was, originally how it all started. And
Got it. Cool.
and one other thing is they do like to hear is we do try to securely stake a chunk of our protocols. At certain points, we're 30 to 40% staked. So if we're able to tell our LPs that they're getting a 10, 11% return on, a third or more of their portfolio, that's kind of a nice bonus to
Is
have.
the is there like an APY that's like rather stable, I guess you can kind of say, or
Yeah, it depends on the protocol, but we have
uh-huh.
we have protocols that's earning as much as 15%.
Mm,
Some are more of 7%. And then that just has to factor in how large of a position do we have in that particular protocol. And some aren't staking. Some we cannot stake, some we can, but then we also want to be very careful on how we do it.
mm,
We don't want to just go to any website or whatever. It has to be very secure on how things are. I mean, we've partnered with a staking company, Global Stake. That's been great. They do a lot of no AWS and they're on bare metal. And it's kind of along the lines of what we really look for in a staking partner.
mm.
So yeah, it has to meet certain qualifications to do that in order for us. But it's nice to have that additional revenue.
Yeah. Did you say you were looking at other chains, but outside of ERC20 and or things?
Well, we are a little
Yeah.
bit, slowly but surely. I'm mostly comfortable in the Ethereum ecosystem in the
Likewise.
ERC20 tokens.
Right.
Have I personally done more on the outside of it? Yes. But then I also want to be very safe when you're dealing even with bridges and all that type of stuff. It's easy when it's a little bit of money and it's your money, maybe. But when you're dealing with larger capital, that's investor capital, we were trying to keep it a little bit more simple, being that we're already in this kind of risky space and we're keeping it very secure. We have everything custodied. That's very important to us. So yeah, we're not quite as nimble as I would be on a personal level, but
Mm-hmm.
I think that's just being smart
Mm-hmm.
and playing it safe with their money.
I'm curious what sectors you're actively looking in right now. Like, what buckets have you got that aren't as full?
Uh, well, the ones we like they're the red hot ones, or you have real world assets.
Mm,
DPIN is one of our favorites. We have AI. AI is going crazy. And then we still always like gaming and metaverse. We think they're going to have their day in the sun. NFT projects. NFTs have had a tough run of late, but we believe that's going to eventually turn around. It's funny, the first go around with, crypto punks and all that stuff, I didn't quite grasp it. And, I kind of,
I still don't. Yeah.
yeah, I look at it like this, everyone's like, well, I can right click on a picture and all of a sudden, I have but it's not true ownership because you don't
Yep.
own. I mean,
It's a
I can hang up a picture of the Mona Lisa in my room, but that doesn't mean I own the Mona Lisa.
it's the
So
provenance. Yeah.
yeah,
Yeah.
so I get it now, but,
Uh-huh.
yeah, it's a fascinating space.
You say RWA, which is funny because I keep hearing that come up, but I don't know what is like your immediate translation of that. Like, what's the first UK use case of RWA? Because I'm still trying to figure out why people are getting googly eyed over it. I mean, I understand some
Yeah.
approaches, but what's the hype about right now?
I think I can give you kind of a basic, the one that's easy to understand, and it would be real estate. So RWA,
Mm,
real world assets,
hmm
obviously if you're able to everything's going to be tokenized eventually. If you
hmm
talk to Larry Fink or, we have other favorite projects that are tackling this issue right now. But if you're able to take a hotel or even any kind of vacation rental, and if it's extremely expensive, $5 million, but if you kind of break it down into 100 different chunks of investment, and tokenize that and be able to have investors all pile in. There's a lot of projects being able to handle all that online. So yeah, you could really tokenize almost anything. I mean, obviously,
hmm
you don't even need to go into the financial instruments, whether it's stocks, bonds, and all that stuff. But I think real estate and breaking that down, is really kind of an easy way to think about what they're trying to
Yeah.
accomplish there.
I always wonder if like the Internet of Things is going to become extra popular for the blockchain of space, especially when it comes to real world assets. So if you're shared, if you have a shared investment in this like painting that's in a lockbox, and when that lockbox gets opened or whatever, and that's all proven on chain. I don't know, or the movements of it as well on chain. So I
Yeah,
could see that being a big thing.
and I think art is huge. Yeah,
Mm,
I mean, it's not everyone has millions of dollars to buy an incredible piece of art, but if you're able to tokenize it and break it down into thousands or however you want to do it, then you get a lot of other people having a chance to own a piece of, let's say, history. And I think,
hmm
it's pretty exciting what's to come, and I don't think there's any stopping it, no matter what anybody might say.
What's what's your highest personal interest? Because and how do you keep that unbiased from what you pick? Like I would probably be choosing like stuff that I just really love and want to be a part of, and I'm like, yeah,
yeah, it's good. I have to practice what I preach. I
hmm
own what my LPs own. I mean, that's
mm,
what it is, and that's what I believe in. And we're invested in the fund ourselves, so we're right there with our LPs. The last thing I would ever want is to have invested LP Globe 3 Capital money be completely different from my own personal portfolio. I don't think that would make much sense. So yeah, I am right there with them. I pick my favorite projects for, and yeah, that's exactly what I invest in.
Do you have like subject matter experts for different sectors that maybe you're not so, more knowledgeable about, or or like, do you see what I'm
No,
saying? Like, no, you have,
well,
okay,
no, I mean, well, I'm an avid, will be an avid reader. So we do research all over the place, and I'm
okay,
always enlisting everybody else's opinion. So
yeah,
if there's, whether it's a great YouTube or it's any kind of anything online, any kind of articles, I'm always diving in and trying to get differing opinions.
hmm
Whether it's good, bad, or anything, I want to know and be able to assess. I do not know everything, and so any
mm,
kind of help I can get, I'm always open to learning more
right,
about every single space, because I mean, I'm not an expert in any space. I don't really feel, because I think that's knowing everything about a topic, and I think there's always more to learn. And
hmm
kind of having that attitude, especially when you're diving in deep for research, um,
hmm
I'm just open to learning and hearing
That
other opinions.
that's like how I am. I have like trusted touch points for
Yeah.
different sectors that it would take my entire life to really understand the language. Like, even when it comes to 3D assets, you would be bewildered by the amount of lingo that they use, and it's common knowledge to them, but for me it's just like I can't keep up. And that's like for several different things. So trust is a huge thing for me in making decisions in the space, and quick decisions too, ones that get you in on the wave early. So like the network thing is so important as well for me. And I was just wondering how that sort of translated over to what you do as well.
No, yeah, real quick, you're right. I mean, if we have something that has to do with the Ethereum ecosystem, we have a kind of a guy that we go to for
Mm,
that, or we have someone else, whether they're more of gamers, then yeah, we're going to probably listen to them on what they have to say. So
mm,
yes, we do have trusted advisors
mm,
really per category that really help
mm.
us along the
If you
way.
need a metaverse guy, I can hook you up.
That would be honestly, I'd love it. I'm always open to it. That would be
I
great.
live and breathe it, and I have
Great.
there's a why behind every what that for the decisions we made, but it had to do with like a lot of research and living and breathing the ecosystem. And so doing all that just in this one sector was like took my entire life away from everything else. So again, like it's I definitely yeah, I like having experts in different fields that I can trust. So anyway, Crystal, I'm gonna digress a little bit. I didn't mean to. I'm very interested. You're in a really cool space and getting to kind of like hop around. I wish I could just discover projects for and let that be my living, and because like I want to have shiny object syndrome and get paid for it,
Yeah,
so that'd be
exactly.
cool.
Exactly. Love it.
So
Well, thank you, Russ, for asking amazing questions. This is a great conversation, and we're getting to learn a lot about each other. So we appreciate that. Do we have any other questions or comments for Matt? Nope, not at this time. Matt, where can our audience reach you at?
The best way to reach us is on LinkedIn, at Globe 3 Capital. We have obviously a website, but it's not super detailed. You could reach us through the website, but if you could go follow us on LinkedIn under Globe 3 Capital, that would be great. We try to post some content once or twice a week that might be of interest to people. So that's the best way to reach out.
Thank you. Thank you so much for being here. We appreciate you. The Crypto Caniverse is putting together a pitch contest for female founders, and BlockSafe has agreed to be our first sponsor by giving giving the winner a $20,000 development grant. If you would like to be a sponsor, please reach out to Crystal Wampler or Alan Lau on LinkedIn. Let's put our hands together and welcome Mr. Mitch Petracca. How's it going, Mitch?
Going great. Hi, everyone. Pleasure to be here.
Wonderful. It's great to have you, Mitch. Mitch, can you go ahead and take a moment and tell everybody a little bit about yourself?
Absolutely. So I am a CPA who focuses on M&A, short for mergers and acquisitions. So I run a boutique firm specializing in all the financial aspects of M&A, which are really at the heart of every transaction. So that includes due diligence, fundraising, valuations, and financial modeling, among some other things. And simply said, we can help really anyone who's buying or selling businesses. So a bit more background kind of on my journey and how I landed there is I began my career at PwC. I was going the very traditional CPA route in the audit practice there, but I wanted a more strategic feel to my career, and so joined the transaction services group there. So I was doing financial due diligence on large corporations, very public transactions in what is called the upper market, meaning really large scale, again, public transactions. That felt a bit impersonal to me, and I always had a bit of an entrepreneurial spin. I later joined several startups and really wanted to gain that exposure in my financial kind of acumen for my career. So that included a stint actually as the interim CFO of Transact, which is a cryptocurrency on-ramp company embedded in MetaMask. Some of you may have used it and not even realized when you're trying to buy cryptocurrency from US dollar and just use it very seamlessly. But while I was doing some of those stints in those financial departments, I continued to moonlight in M&A transactions, and that led me to what's called the lower and middle markets, or the smaller sized companies. There I found that there was a lack of sophistication and kind of the same things I had seen in the upper market. So I saw an inefficiency of really just how diligence was being done in an inefficient way, or just not a cost-effective way, where an individual buying a company can't afford to pay a PwC or other large public accounting firm. So I wanted to use what I had learned at PwC to deliver that kind of big four level of quality, but leverage a lot of technology and automation to make it more cost effective and a better process for those doing middle market and lower market transactions.
That's amazing. Can you give us some examples of how you're leveraging technology to help these middle markets or lower and lower?
Absolutely. I'm a technology buff, so I'm always looking for the next greatest thing that I can leverage. And, partially it's because I want to save myself some time, and partially because I want to continue to add value. So, the more we can manually, remove those manual processes, the better insights we're going to have for our clients, and the more value we're going to ultimately be able to provide. So a lot of clients and companies that we look at use some combination of a cloud accounting software, so QuickBooks or NetSuite or SAP, or things we can tap into very directly and automate a lot of our process by getting to the base layer of really what their accounting data is and working from the bottoms up to rebuild their financial statements and look for potential inaccuracies, errors, or other just deal risks and issues that we need to really overcome as part of the transaction. We're also using automated data rooms, so trying to process the documents that they're giving us as quickly as possible to make sure, for example, payroll matches the accounting records. And we're also developing some proprietary software to that effect because, frankly, none of the FP&A tools are really meant for a due diligence, really process. So that's something that we're kind of continuing to build out and are probably about halfway there.
That is really interesting. Do we have any? I know we have questions out there. I have other questions for him, but I want to see if there's any other questions out there from our panelists. Not at this moment.
Quick one, my side.
Okay.
You spoke about automated virtual data rooms. What does that look like?
Absolutely. So some of the data rooms are very messy. So you think about what is kind of important within M&A transactions. And so some of that is data security, right? Is first and foremost. You're working with confidential data. The seller's very conscious of the fact that it might be leaked, right? So there are data rooms out there that are essentially like Google Drive or OneDrive, but essentially more secure. A lot of those are very expensive. Now, we're using some of those. Ansarada is the perfect example. That's the one that we tend to use. So what it does is it actually reads documents with OCR type technology, gives you summaries. So it's a little easier to process because you have to go through so many documents as part of an M&A transaction in a very short amount of time. You can also interact with a chatbot of sorts to help you find items in the data room, which is really important with an M&A process to just do things efficiently. The reason being you're frequently in a time box of exclusivity, meaning you have a certain amount of time where only you can buy the company if you have an accepted offer, but you need to do your due diligence in a certain period of time before that lapses.
Great question. Go ahead.
I'm in the middle of one of those now, a competitive auction process, and it's the pressure's insane. So any tips on this would be fantastic.
Yeah, absolutely. I think the best M&A people really are conscious of deal momentum, as I call it. So it's really important to continue that deal momentum and make sure you're sequencing and making progress every day within that time box. So some of that, is leveraging technology and removing any friction you can. I'm also very conscious of what I call seller friction. So if I'm on the buy side of the transaction or I'm representing the buyer as my client, I'm really conscious that I'm using the seller's time effectively. And part of that is to gain access to their system so that I can self-service items and I don't need to interrupt them as they're continuing to run their operations, as they have a company, as well as all of these M&A requests to really process through. So it's a lot on the seller side. I've been on that side as well. It's not very fun. So anything you can do there to ease the pain is like really important.
Right, thanks.
Thank you, Tom. You have your hand raised.
Yeah, so Mitch, super fascinated by this area, although that section of my life is kind of long behind me because I'm an older guy. I'm super intrigued because in my experience, the amount of groundwork you have to do is it's reams and reams of data. There's operational data, there's financial data, there's just data, product data. IP data, the number of stacks of data that you have to plow through is huge. And so, the opportunity to use, say, AI tools, for example, to do. I mean, obviously, you need somebody who can, ferret out what needs to be found. Of course, you can't just ask AI to just do that for you. But what I'm curious is so I'm a big crypto guy, right? I do a lot of work with crypto portfolios and stuff. And obviously, all of my work predated having the potential for crypto involved in the business. And that's actually something that there's not a huge pile of expertise on, especially at the level you're talking about. My mentor, two of my mentors were both big six guys, right? So CPAs have been my mentors. So I appreciate, auditing and being able to analyze and come to conclusions and recommendations and look at risk, right? So where do you see this in your world with the aspects of crypto and how it affects what you're doing?
Yeah, I'm glad you mentioned that, Tom. That's an industry that I want to continue to specialize in. I think it's, still a bit in its infancy, as, a lot of us know. And when an industry is at that stage, there's less consolidation, right? So there's some regulatory uncertainty, right? Some other reasons why private equity firms haven't gotten into this space to the same degree that VC firms have, right? Which is a little more growth oriented. So as we continue to see more stable cash flowing businesses, there will certainly be increased interest and increased consolidation and mergers and acquisitions within the industry. I think, like you said, that's a very unique skill set that I have of having set up, cryptocurrency accounting for a high frequency fintech company, right? That's operating in both fiat and cryptocurrency. And utilizing that knowledge to really be able to speak both the M&A language and the crypto language. So that's something I want to continue to develop out. But I would say the demand for M&A within the cryptocurrency is definitely in its infancy.
That's awesome.
Thank you, Tom. Aid, go ahead with your question.
Yeah. So Mitch, are you sector agnostic or you're just focused on the fintech world or VC world?
Great question. I would say I'm very niche down into M&A specifically, and usually in the lower and middle market. So I usually do purchase prices ranging from $2 to $100 million. And so I've got a bit of a niche from that market. Now, we do have specializations in certain industries. And the way I think about this is there are certain things you're going to do on every M&A transaction. So you're always going to look at what are your bottom line earnings and do what's called equality of earnings. You're always going to look at net working capital in some capacity and some other kind of technical items. But then on top of that, you really want to layer on industry specific analyses. So we have additional specializations. And the way to think about it is an add-on. So using cryptocurrency as an example, you would really have to dig into the digital ledger to understand the unrealized and realized foreign currency kind of translations of everything. And that would be top of mind as a risk factor in an M&A transaction. In the SaaS world, that has to do a lot with recurring revenue, looking at MRR, ARR. So we do a lot of SaaS as well. We also do healthcare. And then really actually the majority of our current business is related to what are kind of coined boring businesses. So those can be trade services, really in disguise companies that are secretly making really great cash flow. And so there's a growing trend of that because there's $10 trillion worth of businesses that are going to be sold to new owners, in the coming months and years. And 10,000, retirees are basically retiring per day. So, roughly 12 million of those own a small business. So, really there's going to be a great wealth transfer. People have coined it the silver tsunami. So there's growing interest in M&A activity, and people have really realized that you can actually get an SBA loan and buy a company, with $5 million of debt and only put down 5% in some cases. So it's definitely growing and will continue to grow, but a lot of people are targeting those boring businesses. Trade services, HVAC is really popular, storage facilities very popular as well. So we do a bit of everything, and the way we think about it is really how do we tack on what's risky about that industry to make sure that we're covering those risks appropriately.
One more question. So what's your view on quality of earnings How useful is it?
I would say there are two things you have to do on absolutely every transaction. One of them is quality of earnings. The reason being, it's really the core way you're valuing a company, and you need to have visibility into cash flows. Everything about mergers and acquisitions has to do with cash flows, right? So that's imperative to your model and your thesis of why you're buying or acquiring a company. And so quality of earnings is the major piece of the puzzle as to how much money is this company actually making. And basically what we're trying to do is normalize it. So we're reducing any noise and making sure that if one-time things have happened, we're basically discounting those out, right? And making it a clearer picture of actually how much is earned. If you were wondering, the other thing I say you have to do on absolutely every transaction is if it's not an audited company, which most in this space are not, you have to do something called a proof of cash. You don't have any reliability over the statements or the accounting records that the company is giving you. So you really have to make sure that these accounting records match the bank statements. So if they're asserting that they've made $10 million in revenue, but you only see $8 million coming into their bank account, you've obviously got a major problem there. So we do that. It's a little more complicated of a check than that, but it basically puts a box around their accounting records. It doesn't get you comfortable with how they're categorizing things, but it gets you comfortable with the kind of existence and the fact that they've made all the accounting transactions in their software that they need to.
All right. Thanks.
Absolutely.
I forgot how
Thank
to
you.
raise my hand.
That's okay.
But-
Thank you, Ed. Go ahead, Amanda.
What advice would you have for someone who's getting ready to sell and on the other side, someone who's wanting to buy? And how far do you think ahead do they need to plan?
I think someone who wants to sell or is thinking about selling should really get the process started 2 years early. When you think about maximizing your exit, as you can call it, there are a lot of things that you can do to really make sure you're earning the most money. Now, sometimes that's not realistic or that's just kind of not within your timeline. But if you can help it, starting the process, 2 years beforehand is really imperative. One of the best things you can do is create systems and remove yourself as kind of the owner operator from the business so that you can sell it with, systems in place and make sure that you're growing that EBITDA or that cash flow being generated by the company, and really prepping it for a sale. The other thing you can do is get someone like myself to do sell side due diligence, which really gives you a lot of insights into what are the risks. It helps you organize yourself. And it really just makes sure that you're negotiating with an informed view of how the buyer is going to be looking at the business. Really just makes the whole process a lot easier too. So when you're continuing to run the business, you essentially have everything built out and it's, not as grueling of a process. And then if you're looking to buy a business, some people are doing what's called an entrepreneurship through acquisition method on the small end of things, which I, started to describe. Those individuals essentially raise search funds, they're called, and they go out, they pool some potential investors, they identify a target, they try to, get that target under an offer, and then, we'll start the rest of the acquisition process. Some people are looking for companies to buy for up to 2 years before really finding that target. And many of those realistically fall through for various reasons. So, it's really important to do that early and to really think and learn about the M&A process because it's extremely complex. There's, at least 15 steps related to acquiring a company. So you really just have to surround yourself with mentors and, read all that you can about it. So there's actually a great community online called searchfunder.com, which I would highly recommend to anyone interested in the M&A space. I'd say it's just like this kind of community where it's really high value people who are really just all in on M&A.
Thank you. Great question, Amanda. Tom?
So, Mitch, you actually touched on something that actually I hadn't realized in some time is actually kind of important, at least in my experience. As part of I was on the receiving end of a acquisition, and it wasn't very pleasant. A lot of reasons, mainly because the new owner had ulterior motives. And so actually, he actually jettisoned my boss while he was on vacation. He came in and he took over and he said, "Don't come back." Right.
Oh man.
But the issue for me was that for a long time, at the level I was at, running steering and different committees and stuff in the company, one of the things I always harped on each year was this idea of CBOC, continuing body of knowledge, right? Because I considered that the corporate knowledge, institutional knowledge, resided in such a few concentrated areas that it was a super huge problem. It was a risk. It was, somebody passed away, somebody left. I mean, the list of things was enormous. And so as a technology guy, I proposed, let's build a system to start capturing that. And every year they pissed and moaned about it and said, next year, right? But what came to fruition was I'm one of the only people that's of upper management that stayed. They paid me a ton of money to stay because they could not replace the knowledge, right? That was the key thing. And so in your experience, folks that are trying to do this, you talk about trying to set yourself up so that you systematize so that you're not, the business isn't the owner, right? So what should somebody do if they're trying to kind of unentangle themselves from the fact that their knowledge is actually the business, even if they don't believe that?
Yeah, exactly. I'd say key man risk is one of the things we're looking at in every single deal. So, that comes in various, forms, whether it be someone running an art gallery and it's going to be impossible to, replicate their trained eye relative to art. To, this person is completely uninvolved in the business. It's really just a holding piece for them. But I'd say that that's one of the most essential things that people can do to maximize the value of their business. A lot of people are buying businesses that don't have that in place so that they can put it in place and essentially just sell the business for way more than they bought it for, right? It's like flipping a house in a sense. And so some of the ways you can do that are just identifying where you don't have that knowledge transfer in place. Like, where do you not have standard operating procedures? And there's a concept that's fairly morbid of like, basically saying what would happen if this person was hit by a bus, right? And like, thinking about it from that mentality is like, if this person just disappeared from the face of the earth tomorrow, what would we do, right? As a company, what sort of risks would we have? And that's the easiest way to think about it, and just think to yourself, do I have a critical kind of risk there with that person? And if I do, how do I get the knowledge transferred to someone else so that I have a backup? Or how do I leverage systems and technology to make sure that that's not a key man risk, before I sell the business?
Yes, I think that's super important. I actually addressed this by actually building kind of a foolproof disaster recovery plan that essentially covered most of everything on the tech side that needed to be covered. But at the end of the day, I also pitched a big proponent of succession planning, because you need to engage people and get them wanting to learn to be a replacement, right? And I benefited from that, and I wanted others to. So I'm assuming when you look at these businesses, you're also looking a little bit at how the management team actually operated and what their philosophies, what their core values were, and so forth. And that's probably part of the calculus as well.
No question. No question.
Great comments. Thank you, Tom. Do we have any other questions, comments out there? Top of mind? Stephen.
Mitch, you've spoken a bit about the tech that you use. Do you use any other AI tools or technology in your process?
Absolutely. A good amount, as really wherever I can. So we're infusing like just ChatGPT into various processes. I would say, AI, someone touched on it earlier, is a piece of leverage, right? It's a good way to have leverage and to save yourself time, but it can hallucinate. You have to make sure that you're treating it like an entry-level analyst, where you're really verifying everything it tells you. So we're not using AI to just scrape documents and leave it at that, right? And taking that for face value. We have things that we need it to check, right? And it helps us do things faster, but there's still a lot of strategic involvement and ultimately we're partners with clients in deals. So there's a lot of things that, we're not just creating the analysis and saying, hey, there's these adjustments. We're telling you, okay, well, we found these things. What does it mean for the overall deal? And right, how should we renegotiate based on that, or things of that nature? Some other places where we're really using technology, LBO modeling, there's some great software around that. Industry comparables, we use BizMiner, and so there's increased data there. So we're really trying to get really advanced from a data perspective. Actually, the newest venture that we're working on is a debt and equity placement tool that really leverages outreach and marketing experts. So essentially, that's a combination of automation with enriched leads and AI to essentially reach out to a network of over 44,000 lenders. One of the biggest friction points within deals is actually getting the deal funded. So it's a long process to manage all these different banks where they each have unique questions and their own processes, and you have to get them to sign an NDA. And then if you're doing this with 50 banks, all of a sudden you're spending your whole day just managing emails. So we've essentially created a system for AI to be doing this while actually being very personalized and engaging, so that it's not just a regular kind of email out of the blue to the banker, but it really self-serves the deal to them and the flow of information they need to get comfortable and up to speed with the deal.
Okay, perfect. You mentioned an LBO tool that helped with your modeling. What's the name of that tool?
Mosaic.
Okay.
Yeah.
Perfect. Thank you.
Absolutely.
So, Mitch, I want to challenge you on something. You said that you work across many different fields, but we know that you can't be everything to everyone, and niching down is super important. But my question to you is, do you think that you can kind of go across multiple fields because you are implementing AI? And then what other things are you doing to make sure that you're not missing anything if you are working in various other fields?
Yeah, that's a great question, Crystal. I mean, there are things that we won't pretend to be an expert on and won't take deals on. So we're not taking anything related to hospitality or commercial real estate or certain other kind of aspects of the business. So we've, slowly developed what are those kind of industry add-ons that we now feel comfortable taking on anything within that industry, right? Because we're seeing a lot of M&A deals in these spaces, right? So construction accounting, we've developed a way to understand the percentage of completion method, which is like a really technical accounting piece of saying how much money is this company earning kind of over time. And so it's a combination of, realizing that we can't specialize in everything, but that we can use technology and we can develop what our competencies are around the core competency. So really just the more reps you do in an industry, the more comfortable you'll feel with it. Part of it is our team has different expertise, right? So I've got someone with more of a healthcare background versus someone with more of trade services background, and that's a great way to complement it as well. And like you said, just really kind of using AI and other tools as thought partners as well of like, hey, what risks, really are apparent in this industry? And then that's where BizMiner and, some other IBIS World type reports really important too. You use what's called the NAICS code, basically to look up everything about that specific industry and then think through what are the risks of this industry and making sure that you're really thinking about it from that perspective.
Thank you. Thank you for elaborating on that. Before we move on to aid, you say that your mission emphasizes client empowerment. Could you share a specific instance where your advisory services empowered a client during negotiations or a deal?
Yeah, no question. I mean, we're trying to add value really however we can during the process of a deal. And so really almost any time we have a networking capital finding or quality of earnings finding, essentially our fee is paid for by the multiple and the difference. And, if any negotiations need to happen, it's really, worthwhile to have someone inspecting the company you're trying to buy or sell. It's like buying a house and getting an inspection, right? Except for business is way more complicated than a house, right? So you need someone who does business inspections all day long, right? Which is essentially what our team does. And so we're empowering them to find items, but then negotiate those items as well. And, we try to go above and beyond as well. So for example, one of my clients from 2 months ago had their bank pull out at the last minute of their deal. Fantastic deal. Everything was going great, except for they only had one term sheet from a bank. And so all of a sudden they're at the closing table essentially, and they can't close this transaction because the bank backed out at the last second. So we helped them find a new bank, and they were able to basically save the transaction with just a 2 or 3 weeks kind of difference to be able to still accomplish this dream. And these were two young Yale guys with MBAs, so it was really exciting to kind of add that value and help them on the process of actually getting this one over the finish line.
That's wonderful. How do you go about charging for your services? Is it hourly based? Is it, how do you go about doing that?
Absolutely. We'd love to operate on a flat fee basis wherever we can, specifically with due diligence. Some other perspectives with diligence providers or legal also is that you're really not sure where they're spending the time, or really have to be conscious of, are they spending time in the right places? I never want my clients to worry about that, and really we come at everything from a relationship aspect. So we'll give you kind of upfront what the purchase price, of our services is as a flat fee. And then we go from there to basically just make sure that, everything will round out in the end. So we're not too worried about nickel and diming and worrying about, how many hours we're spending on specific deals. So that's kind of our model and approach.
Yeah, I love that. Some of the best advisors have that exact model. I think that a lot of CPAs and M&A advisors are getting away from what they call the billable hour, right?
Right.
If you do that, then the founder, the person selling is like, oh, I wonder if they're going to charge me for this or that, and then they don't reach out, and the communication gets lost, and you can't stay on top of things. So I love that you do bill on a flat fee. That's smart. We have time for one last question. Aid, go ahead.
So Mitch, just two questions actually. I asked one that relating to quality of earnings earlier, and I'm not sure if you actually really addressed the question I asked, which relates to how important it is. Because what I was seeing with the quality of earnings over the years is becoming more or less like, I don't know how best to describe it without insulting anybody. When I see a 50-page quality of earnings, it's of no use to me, right? I'm not going to read, the bank is not going to read 50 pages. I'm not going to read 50 pages. So I just want to know what's the crux. I need just 10-page or 5-page quality of earnings. That makes sense to me. But I see most of this advisory firm, what they do is prepare 35, 50-page quality of earnings, which is why I just get, it doesn't make any sense. I could do that myself. 5-page, 10-page. And the second question is, when it comes to financial modeling that you mentioned and you talked about getting a LBO model from somewhere, to what extent do you think that is prudent for people that don't really know what you're doing, in the sense that some of these models have bugs? They've been prepared by people that don't have experience. And if I buy something off the shelf and I'm pitching to an investor and say, okay, let me see your financial model, and it's speaking holes in those financial models, and I can't defend it, right? So that's why I have issues with, when you buy something off the shelf, if you didn't build it or your team didn't build it and you can't defend it, you should be able to defend whatever is going in there. If there's issue with the formula, you should be able to fix it or find a way to fix it. But if you don't build it, you don't know where the problem is.
Absolutely. Absolutely. Yeah, great, all great points. Aid, on the quality of earnings piece. So quality of earnings is a bit of a misnomer. People frequently use it in this space to really identify the full financial due diligence report. I was previously speaking to it as one of the analyses done within the financial due diligence report. Quality of earnings is absolutely essential. You really should do it on every deal. I agree with you. That's something that I've seen in many QofE reports where it's really lengthy. It's just full of appendices and it's not full of value, right? What we're trying to give for our clients is value. So we do something that most QofE providers don't do, which is an executive summary trying to say, you basically here are the key deal issues, right? These are the things that we found that are going to impact your deal. And we need to identify and focus on these items specifically. So that is kind of one of the ways we go about that, right? We want to provide you with all the information you need and, do it in a concise way where we can really give you that information as quickly as possible. On the modeling side of things, you're completely right. There's a range of people who need the financial modeling help or don't, but regardless, you need to be able to speak to it to a bank, and you need to be able to defend your free cash flows. At the end of the day, that is what matters most to a bank in getting funding for, any M&A deal. So it's all about how much free cash flow does this company actually make?
Thank you, everyone. We have to wrap up now. Mitch, where can our audience reach you at?
Absolutely. I'm available at Mitch@Petrarca, like my last name, group.com, or just LinkedIn.
Thank you, Mitch. Thank you, everyone, for being here today. Alan, we have about 30 seconds. Can you please close in prayer?
Yes, let's bow our heads and close in prayer. Dear God, Heavenly Group Father, thank you so much for putting another great show up, Crypto Counterverse, together with people come from different spaces. We welcome Matt, welcome Mitch as they endure into the hedge fund space to invest in cryptocurrency and to merger and acquisitions in this space. We know this space and industries and continue to grow. May you continue to bless us in all things that we do as we observe Good Friday today. May we always remember Jesus died on the cross for us as the observation of crucifixion. Let us take some time to glorify you, God, that you send your only begotten Son to earth to die for our sins and wash away and have eternal life. So let's pray, continue to pray for this group, that you will watch over us and help us grow, educate us, inspire us, and continue to lead the way in everything that we do. You're always there for us. We continue to pray, continue to believe, continue to have faith in you and everything we do. In Jesus' name we pray. Amen.
Amen.